Okay, hello, good morning, guys. Good morning, everyone. So, yes, there was a bit of technical glitch because of which we are running a little late. But yes, nonetheless, good morning, everyone, and welcome to this session of the salaries chapter. So, guys, please confirm, am I audible and am I visible to you? Am I audible to you and am I visible to you? Please confirm. Hello, good morning. Good morning, everyone. Good morning. Am I visible to you and am I audible to you? Good morning, Miraki, Kirti Batra, Karishma, Om, Abhishek, Mansi, Hardik, Anushka, Saksham Gupta, Ravi Gupta, Jyotish, Yashika, Vivek, good morning, Chirag, good morning. Good morning, everyone. So, yes, there was a bit of technical glitch because of which we had to start little late, but nonetheless, we are back on track now. Good morning, Abhishek. Good morning, R. Srinath Rangarajan. Good morning, Saloni. Good morning, Shiba Prasad Sahu, Nishant Mishra, R. Srinath. Good morning, everyone. Abhishek thinks. Nitish Shah. Good morning. Good morning, Nitish. Shivraj Thorat. All right. Good morning. Good morning, everyone, and welcome to this live session of part 2 of the chapter salaries. Salaries, yes, we had started the chapter salaries in our last session, and it is by far the most important, chapter or most important subject of your syllabus, guys. Most important topic of your syllabus, salaries, and yes, for intermediate students, a mandatory question of bare minimum 8 to 10 marks will come in your examination. Bare minimum. I had already told you in the last lecture that in the last examination, December 2021, the section D, the entire case study was based on salaries chapter only. So yes, a very, very important chapter. Nikhilesh, Pawan, Ashish, Kartike Mishra, Shivam, Pavan, Nandini. Good morning, everyone. Good morning. All right. So, yes, guys, good morning and welcome to this session of salaries part 2. We had already completed the part 1 of our chapter in the last class, and this part will be dedicated to part 2. So, guys, in the last class, we had covered our allowances portion, right? Allowances means the monetary benefit which is given to an employee, the money which is given to an employee for meeting certain specific expenditure, that is known as allowance. Allowance is always given in monetary form to the employees, which again is taxable, subject to the exemptions which are made by the Income Tax Act. Apart from the exemptions which are made by Income Tax Act, the entire amount of allowance is taxable in hands of the employee. So allowance is a taxable portion of salary chapter. And the second portion that we are going to discuss today is perquisites. Now, what do you mean by perquisites? Perquisite means something which is not given in monetary form, but it is given in form of benefits, which means it is given in form of some benefit, like you give to your employee a car, you give to your employee some accommodation to live free of cost, you're not charging anything from that particular employee, you give some servant to the employee for his personal benefit. All these things are known as perquisites. And again, perquisites are taxable. Income Tax Act has shown us the way in which perquisites are taxable. Perquisites are taxable according to the rules and regulations, according to the calculations which are given in the Income Tax Act. Perquisites are taxable. The major difference between perquisite and allowance, if I were to point it out, is that allowances are delivered in form of money, in form of hard cash, right? So allowances are delivered in form of cash, in form of money, and perquisites are delivered in form of benefits like, the car is being extended to the employee, or a house is being extended to the employee. So the perquisite is being extended in form of benefits, and allowances are extended in form of cash, right? Second difference which is there between perquisite and allowances is that, guys, in case of allowances, exemptions are computed, which means the Income Tax Act would specify how much of a particular allowance is exempt, and the remaining amount will be taxable. So suppose if a total allowance is, say, given to you for 20,000 rupees, then The exempt allowance will be, the calculation of exempt allowance will be given in the Income Tax Act. Suppose the exempt amount is 5,000 rupees. So out of 20,000 rupees of total allowance which is given to the employee, 5,000 rupees is exempt. What is the taxable amount of allowance? The taxable amount of allowance is 15,000 rupees. That is the way we compute the taxable allowances. Now coming on to perquisites, guys, in case of perquisites, we do not calculate the exempt part of a perquisite, but we directly calculate the taxable part of perquisite. Perquisites which are taxable, they are to be computed, and Income Tax Act gives specific formula for the perquisite to be taxable and what amount of perquisite will be taxable. Directly we compute the taxable part of perquisite. So that is the difference between perquisite and allowance. In allowances, we compute the exempted part, the part which is exempt. And in case of perquisites, we calculate the amount which is taxable. So taxable amount is calculated in case of perquisites. However, in case of exempt allowances, we calculate the exempt portion. So yes, let's start the chapter, the topic. The name of the topic is perquisites. And the first perquisite which we are going to deal with today is rent-free accommodation. The first perquisite which we are going to deal with is rent-free accommodation. It is a house which is given to the employee free of cost, nothing is charged, or even if some bare amount of rent is charged, it is much below what is eligible to be charged from the employee. So perquisites, the first perquisite is rent-free accommodation. Rent-free accommodation is given to the employees, is given to the people who are wanting to take home from the employer. So rent-free accommodation generally employer gives to its employees, and not all employees, guys. Employees who are of a certain designation, of a certain level, those employees are given this perquisite, which is known as rent-free accommodation. So this is rent-free accommodation. We are going to calculate the amount of rent-free accommodation. How will we calculate the amount of rent-free accommodation? That is what we are going to calculate now. And the best part is that, guys, in this particular case, there's no amount, there's no monetary value which is given to the employees. It is directly the benefit which is given to the employees. And the benefit which is given to the employees is in form of perquisite, the benefit itself, which is the rent-free accommodation which is given to the employee. So rent-free accommodation, the perquisite which is given to the employee. Rent-free accommodation means that we are not charging any rent from the employee. Employee is given a house to live in. Let's start the calculation. So first of all, there is government employee. The rules are different for government employees. Rules are different from government employees who are on deputation to specific undertakings, and rules are different for other employees. So we are dividing our discussion into three parts. Rule of rent-free accommodation for government employee, rule for rent-free accommodation for government employee who is on deputation to any undertaking controlled by government, and rules for rent-free accommodation for other employees. Other employees means the employees which are belonging to the private sector, the employees which are working in the private sector. For them, there are third set of rules. So first set of rules refer to the rent-free accommodation which is given to government employees. And guys, you must have heard that government employee gets a big house, where he would stay, and his entire family will stay in that particular house. And that house is given to the government employee free of rent. There's no rent which is charged. So yes, this rent-free accommodation which is given to a government employee will definitely be taxable in hands of the government employee. Whether the employee is a central employee or a state government employee, both are eligible to be taxed in the same manner. Secondly, those employees which are working in undertakings controlled by government or any military persons will also be categorized as the employees which are eligible for rent-free accommodation under the government sector. Okay, so government sector includes four things: central government employees, state government employees, employees who work under the undertaking controlled by the government, employees who work under the undertaking controlled by the government. So if there are PSUs, the the Navratnas, the Maharatnas, if the employees working over there under the undertaking which is controlled by government, that will also be categorized as government employee. Plus any military persons who are there. So the persons who are working in military, those persons will also be eligible for this particular calculation of rent-free accommodation. So these four things are categorized as government employees. Number one, central government employee. Number two, state government employee. Number three, employees who are employed under the undertaking controlled by the government. And number four, military persons, persons who are working in military, persons who are soldiers in army, they are also categorized as government employees. Now guys, for all of these employees, the valuation of taxable part of perquisite is very simple. It is the license fees determined by the government itself. So government has its own bylaws, government has its own laws. According to those laws, government will determine the license fee, whichever license fee is there, and government is going to determine what amount of perquisite should be taxable. Now guys, there's a big house, okay? Now how to value what is the rent of that house, or how to value the taxable value of perquisite of that particular house, is determined by the license fee, which is determined by government. So license fee will be determined by government, and that is the value of perquisite or for in case of government employees. Now we come on to government employees who are under deputation to any undertaking controlled by government. Guys, sometimes what happens is that, you know, a person belongs to government of India. He belongs to, he's an employee of government of India, but he's deputed to. Deputed means what? He is required to work with a PSU as a nominee of government. He is required to work with a PSU as a nominee of government. Now this particular second category is for those government employees who are working under deputation in a PSU. Deputation is a different thing, and if you are on rolls of PSU, then you fall under this category. But if you are not under rolls of PSU, you are a government servant, but you are working as a deputy, as a deputation role under the realms of government of India. You are working in a deputation in which organization? PSU, public sector undertaking. Then you are eligible to value your perquisite in the following manner. Third is private employees. Other employees means specifically private employees. Private employees are required to value their perquisite in this particular way. So now we are going to see the second way first. Okay, the second way. Okay, one important thing that, you know, government employees, two things are excluded from definition of government employees: excluding employees of local authority or foreign government. So we will exclude the employees of local authority. Local authority employees are not included in government employees, and any kind of foreign government employees, government is not of India, foreign government employee who are working in India, they are also excluded from government employee definition. So they will not be considered as government employees. They will be clubbed under this third category, which is the other employees head. These are the three categories of employees which we are going to consider in perquisite of rent-free accommodation, and how to calculate that perquisite. Now coming on to how to calculate the perquisite in case of government employees who are on deputation to any undertaking controlled by the government. If any undertaking is controlled by the government and any government employee is on a deputation in that particular undertaking, how will we value the perquisite value in that particular case? So guys, this is the table which shows how will we value this particular perquisite. Population, it is on the basis of it is on the basis of population. So if the city where accommodation is provided, its population is more than 25 lakh rupees, then we will calculate the taxable value of perquisite as 15% of salary. Then if the population is 10 lakh to 25 lakh rupees of that particular state in which accommodation is provided, okay, this is the population you have to see of the area of the state where the population is where the accommodation is provided. So 10 to 25 lakh rupees, 10 to 25 lakh population, this is the 10 to 25 lakh population bracket. 10% of the salary is the taxable value of perquisite, and below 10 lakh population, below 10 lakh population, then the taxable value of perquisite should be 7.5% of salary. So 15%, 10%, and 7.5% of salary is the benchmark which will be used as taxable value of perquisite. Guys, again, it is just an estimate. It is just an estimate. There is no concrete way, or there is no, you know, hard and fast formula which can be applied to tell you that what is accurately the value of a particular perquisite. There is no hard and fast formula like that. It is just an estimate. So all these numbers are just an estimate of computing the taxable value of perquisite. They are just an estimate. So on an estimated basis, we are calculating these value of perquisite: 15%, 10% and 7.5%. This is the taxable value of perquisite which is given under the Income Tax Act. Again, a mechanism to compute it. But if you ask me, sir, will it give us an accurate and absolute accurate figure? I'm not too sure about that, whether it gives an absolute accurate figure or not. But as per the Income Tax Act, the taxable value of perquisite will be computed using these three benchmark, using these three formulas. Okay, and last, of course, but not at all the least, and the most popularly used formula, the most highly used formula of computing rent-free accommodation in case of other employees, that is the private employees which are there. In case of private employees, the calculation of rent-free accommodation is computed as under. Let's see what is the value of rent-free accommodation in case of private employees, or so to say other employees. So in case of private employees or the other employees, if the accommodation is owned by the employer, then we have a different set of formula for it. And if the accommodation is hired by employer, then we have a separate set of formula for it. Okay, so what is difference between accommodation owned by employer and accommodation hired by employer? So guys, employer might also not own that particular house that it is giving to its employees. The employer might hire it, might take it on rent and then give it to employees, and the rent is being borne by the employer. Possibility. So there are two possibilities. Accommodation is hired by the employer. There are two possibilities. Possibility number one, accommodation is hired by the employer. Possibility number two, accommodation is owned by the employer. Employer is the owner of that particular accommodation. That is the second possibility. First possibility is accommodation is hired by the employer. These are the two possibilities which are there. Okay, now if the accommodation is owned by the employer, if the employer owns the accommodation, if the accommodation is owned by the employer, it is employer's own accommodation which is being granted to the employee, then the perquisite value will be determined as per the same formula, as per this table which we had just studied. That if the accommodation is provided in an area where the population is more than 25 lakhs, then 15% of salary is the taxable perquisite. If the population of that area is 10 to 25 lakhs, then 10% of salary is the taxable perquisite. If the population is less than 10 lakhs, then 7.5% of the salary is the taxable value of perquisite. Using this formula, we calculate the accommodation value which is owned by the employer. So if the accommodation is owned by the employer, then this is the formula which is to be used. But if the accommodation is hired by the employer, which means that employer is actually paying rent for that particular property which it gives to its employees, right? So accommodation is hired by the employer. If the accommodation is hired by the employer, then perquisite is lower of the following: rent paid by the employer, the rent which is actually paid by the employer, or 15% of salary, whichever is lower. Whichever is lower is the taxable value of perquisite if the accommodation is hired by the employer. Naturally, guys, if the premises is hired by the employer, then obviously employer would be paying some rent to a third party for providing that rent-free accommodation to its employees, right? So this is that rent which is paid by the employer, or 15% of salary, whichever is lower. 15% of salary, whichever is lower. That is the value of perquisite which is there. Okay, sir, got it? Now some basic rules, guys. Some basic rules about this particular perquisite. Okay, and the basic rules are that the perquisite value of furnished rent-free accommodation. So the formulas which we had just now studied, those formulas are for unfurnished home. If the unfurnished home is given to the employees, if unfurnished home is given to the employees, then the formulas are to be used. But if the home is furnished home, if it is a fully furnished home, then the value of perquisite will be perquisite value of unfurnished home, which is given as per the formulas which are given above. So perquisite value of unfurnished rent-free accommodation, which are given over here, that value which we have computed, plus perquisite value of furniture. We'll add perquisite value of furniture to this rent-free accommodation to get the full value of perquisite. So perquisite of furnished rent-free accommodation is equal to perquisite value of unfurnished rent-free accommodation plus perquisite value of the furniture which is given along with the rent-free accommodation. That is how we'll compute the perquisite value of furnished accommodation. If the accommodation is furnished and sir employer, then 10% of the original cost. If the furniture is hired by the employer, then rent which is actually paid for this particular furniture is the value of perquisite which is to be added to the salary of the employee. That is how furniture valuation, perquisite of furniture valuation is to be calculated, is to be undertaken. That is how. Next is, what is the definition of salary? Definition of salary is basic dearness allowance, retirement benefits, any bonus is to be added, commission plus fees is to be added, taxable allowances are to be added, any monetary payments, so allowances are to be added, any monetary payment is to be added, termination benefits are to be added like VRS, pension, leave encashment, etc. So guys, apart from perquisites, everything else should be added to compute the salary in this particular rent-free accommodation case in the perquisite of rent-free accommodation. Then one important aspect of rent-free accommodation is, guys, sometimes what happens is, the employees moving from one state to another state. So employees being transferred from, say, Mumbai branch to Delhi branch. In Mumbai, the employee had a rent-free accommodation, and in Delhi also he's being given a rent-free accommodation. In Mumbai, he had a rent-free accommodation, and Delhi also he's being given a rent-free accommodation. So there can be a period of overlap. Overlap means there can be a period when the employee is having a rent-free accommodation in two states. First in Delhi, second in Mumbai. In both the states, rent-free accommodation is there on a parallel basis, on an equal basis. This is very much possible. So this is a possibility. So this possibility has been taken into consideration by the Income Tax Act. Now the question is whether, sir, during that intervening period, when we have rent-free accommodation in both Delhi and Bombay, will we be subject to double taxation because two rent-free accommodations are there? So guys, Income Tax Act says that if the overlap or if the double perquisite is there for 90 days or more, if the double perquisite is there for if the double perquisite, if the perquisite at both the places are there for 90 days or less, then it is exempt. Up till 90 days it is exempt. So exemption for 90 days for two houses. So if two houses are there for 90 days, we are going to calculate the rent-free accommodation of only one house, whichever has got a lesser rent-free accommodation value. So for 90 days we'll have the lesser value house, whichever is the value perquisite of whichever house is less, we'll have that particular perquisite for 90 days. But if you have both the houses under your possession for more than 90 days, then guys, for 90 days, perquisite value which is lower of both the houses, that is the perquisite value. But if you have both the houses for a period exceeding 90 days, now this is wrong. There can be an overlap of, say, maximum 90 days, which is 3 months. 3 months you can have both the houses. But if you extend your double houses to rent-free accommodations for beyond 90 days, then aggregate of perquisite value of both the houses should be taken into consideration while calculating the perquisite. The perquisite value will be the perquisite value of house 1 plus the perquisite value of house 2 taken together. That will be the total value of perquisite of rent-free accommodation. Yes, we are going to charge double rent-free accommodation from you because you are being given two houses in different states. We are going to charge double the value of perquisite. Obviously, guys, since you have two houses, you have two rent-free accommodations, and the time period of 90 days in case of transfer has expired, then guys, we are going to charge both of them as rent-free accommodation. You'll have to pay perquisite on both the rent-free accommodations. That is the law. That is the rule. Okay, so yes, this was one of the most important perquisites of your syllabus, guys, rent-free accommodation. And yes, examiners' favorite perquisite, let me tell you. So in the examination, you will find this perquisite quite often. It has been repeated quite often in the examination. Now, what if the accommodation is given in a hotel? What if accommodation is given in a hotel? It is not given in a house which is rented or owned by the employer. It is not given in a house. It is given in a hotel. Then what happens if the accommodation is given in a hotel? Then guys, this is a perquisite for both government and non-government employees. This perquisite is eligible for both government and non-government employees. Accommodation which is given in a hotel. Value of perquisite should be lower of the following. So value of perquisite should be lower of the following: 24% of salary or the actual charges paid to the hotel by the employer. So employer is paying some amount to the hotel, right? So we are going to compute the 25% of salary value or the actual amount of charges which is paid to the hotel. Lower of the following should be the taxable value of perquisite. This is only and only in a case where accommodation is provided in a hotel. Accommodation is provided in a hotel. So where accommodation is provided in a hotel, then the value of perquisite should be lower of 24% of salary or actual charges paid to the hotel, whichever is lower. Nothing is taxable if accommodation is provided 15 days on transfer of employee from one place to another. So if the transfer happens only for the hotel is provided only for 15 days, and that too in case of transfer of employees, where the employee is getting transferred from one place to another place. Okay, for that particular period, Ankit Shukla is saying that if the allowance are in form of kind, how should we add it? So Ankit Shukla, the answer is very clear that if it is in form of kind, then the Income Tax Act is telling you how to compute the monetary value of that kind benefit. And this is what perquisite is all about. Perquisites are always given in kind. So Income Tax Act will tell you what is the value, monetary value of that perquisite which is given in kind. That is what we are discussing in the class right now, perquisites. They are not given in cash, they are given in kind. So Income Tax Act will tell us what is their value in monetary terms. That is the answer. Ankit Shukla. Jyotish Shah says, sir, we will calculate the days wise or month wise in case of two houses. Days wise is the ideal way. However, sometimes, the question can actually, for ease of computation, can also calculate it month wise. But days, counting of days should be actually the right way. Okay, sir. Then nothing is taxable for 15 days. For 15 days, in case of transfer, nothing will be taxable. Both the rent-free accommodation will be rent-free accommodation which is given in hotel will be tax-free for 15 days. Salary includes all the elements as included while calculating the RFA. So salary definition will be the same as we had seen in rent-free accommodation. All right, now we move on to one of the very important perquisites of our syllabus, guys. And yes, this perquisite is actually very, very important perquisite. This perquisite is the perquisite which is usually given to the higher segment of the company, which is the managers, the general manager, the senior managers, the senior managerial roles, the supervisors who are sitting at a considerably high level. This particular perquisite is given to them. So this perquisite is known as sweat equity shares or ESOPs, employee stock option plan. Employees stock option plan or sweat equity shares. This is known as ESOP, which is given to employees, and yes, it is taxable as salary in the hands of the employees. Now, before we come on to the taxable portion, to computing the taxable portion of perquisite, let me let me just explain what do you mean by ESOP. What is this sweat equity share? What is the meaning of this word ESOP? Now let us first examine this. So ESOP life cycle. ESOP life cycle. So ESOP is shares of the company which are granted to the employees at a very, very minimal rate, at a discounted price than the market. So I'll give you an example. Suppose a company's shares are trading in market at 120 rupees. Employee will offer those shares to the employees at 100 rupees. That is known as ESOP. That is known as ESOP. But yes, in return of getting this benefit, the employee is expected to not to terminate his service for a stipulated time period. He will be signing a bond that he will be staying with the company for a stipulated period. There are some restrictions which are imposed on the employee if they are opting for ESOPs. Of course, we don't want employee to have a short-term capital gain and fly away with our ESOPs and leave the company. We want employee to work for the company, for the betterment of the company, for a longer period of time. Since we have invested in that particular employee, since we are giving our ESOPs at a concessional rate to that employee, we will expect that employee to work for the company for a longer period of time, little longer period of time. We will expect the employee to work for the company. So yes, this is the life cycle of an ESOP. How does ESOP function? How does ESOP evolve? This is the lifetime, the life cycle. Let us see. So first step is that the ESOPs are granted to the employee. ESOPs grant means an option is given to the employee. An option is given to the employee to take ESOP of the company. It is an option. It is not an obligation. It is a right. Right means it is a right. ESOP means it's a right, which means the employee can also choose to reject the offer. So why would an employee reject the offer, such a lucrative offer, a thing which is worth 120, employees getting 400? Why would employee leave this offer? Guys, the reason can be many for this particular leaving. Number one, employee doesn't have money to pay to the company, even to the extent of 100 rupees. Employee is short of money, because ultimately 100 rupees is to be paid to the company. Employee short of money. Employee doesn't want to invest in that particular company. Reason number two, employee knows that he is not going to work with the company for a longer duration, for a longer period of time. Employee knows that he's not going to work for the company for a longer period of time, then also he may reject the offer which is given to him by the company. So this can be the second reason. Similarly, guys, there can be many reasons why the why the employee choose not to take sweat equity shares. There can be several reasons, and yes, employee is free to choose to not to invest in ESOPs. But every employee who is eligible to take the ESOPs is first granted the right to choose. Employee has to choose. Then he is given some time to think. Some time to think. That is known as vesting period. Vesting period. He is given 1 year time to think. You think, please, you think properly, and then you tell us whether you want to purchase these shares of the company or not. So this is known as the vesting period. Period when the employee is given the option to think whether he wants to choose to take the shares or not. This is known as vesting period. Vesting period is usually of 1 year or 2 years of time. Then comes the exercise date, the date when the employee has to finally decide whether he wants to take the shares or whether he doesn't want to take the share. That is known as exercise period. That is known as exercise period. So, guys, on the grant date, employee is given a right to buy the shares, suppose at 100 rupees. The shares were worth 120 rupees at that point in time. At that point in time, the shares were worth 120 rupees. So, the shares would be available to the employees at 100 rupees on the exercise date. So on the exercise date, employee will be granted the shares worth rupees 120 at 100 rupees. So guys, now tell me something. The shares were worth 120 on the grant date. The shares were worth 120 on the grant date, and the shares were offered to the employee at 100 rupees. Now suppose till exercise date, the shares value increases by 20 further rupees, and the value of the share is 140 rupees on the exercise date. On the exercise date, the shares are worth 140 rupees. But still, guys, on the exercise date, the share will be available at 100 rupees to the employee. What is the amount of gain which employee has from exercising these shares? If he exercises these shares, I want the answer in the chat box. Please write the answer in the chat box. If the shares are worth 140 rupees on the exercise date and the employee is required to pay 100 rupees, which according to which the right was granted, then how much benefit would the employee have taken by buying the share at 100 rupees? The share is worth 140 rupees. What is the total amount of benefit which accrues to the employee? Yes, very good. Pankaj says 40. Ravi says 40. Muhammad Azam says 40. Miraki Kartike says 40. Jyotish says 40. Ravi Gupta, Vivek Sharma, Kirti Batra, Abhishek Kumar, Aditi, SPD, Yashika, everyone says 40. Perfect answer, guys. Perfect answer. Perfect answer. The benefit which employee gets is worth rupees 40. Now, as per the Income Tax Act, this 40 rupees is taxable as salary in hands of the employee. This is the perquisite value which is taxable in hands of the employee. This is the perquisite which is taxable in hands of the employee, and the perquisite value is 40 rupees. 40 rupees is taxable in hands of the employee as salary. 40 rupees is taxable in hands of the employee as salary. So this 40 rupees is the difference between the market value of the share as on the exercise date minus the value which is paid by the employee to the employer. This is the value of perquisite which is taxable. Okay, sir, got it? So what does it say? It says fair market value on exercise date. Value of perquisite is equal to, so difference between grant of option and exercise date. This is the vesting period, guys. This is the vesting period. Grant of option, exercise date, and sale of shares. This is something different. This we are going to discuss in capital gains chapter. Okay, this is not salary chapter. This we are going to discuss in capital gains chapter. This is very different. What I am referring to is the grant of option which is granted till the time when the option is exercised. So difference between grant date and exercise date. What is the difference between grant date and exercise date? The difference will be the fair market value, and that fair market value is taxable as perquisite value. The fair market value will be taxable as perquisite value. Now, what if FMV is less than value of grant of option? Then Jyotish Raj, no employee will take that particular option. In that case, no employee will take that particular option. Employee will ignore that option. Employee will not take that option in that particular case. That is the correct answer. Okay, sir. Yes, there can be a situation FMV is less and grant was more. So during the time when time passage, when time passed, the FMV had fallen. This can be a case, very practical case. Okay, sir. Next is ESOPs are granted in exchange of providing know-how by the employees. So employees providing know-how, employee is providing his technical skills, his intellectual property skills. That is what employee is providing to the employer is providing to the employee, and in exchange of those skills, ESOPs are granted to the employee. So ESOPs are granted to the employee against what skills? Against skills of providing know-how, intellectual property, the work that employee will be doing in the business, that particular know-how, that particular benefit is given to the employee. So against that benefit, the ESOPs are granted. In case they are granted against any other consideration, so if the employer is actually purchasing property of the employee, and against that property it is offering its shares, then it is not taxable perquisite. Okay, so if the ESOPs are granted against any other consideration like acquisition of employees' property, it will not be taxable as perquisite. It may be taxable. It may be taxed as capital gain. So if these shares, if these sweat equity shares, if these ESOPs are offered against anything apart from the intellectual property, then guys, it is taxable as capital gains and not as perquisites. It is not taxable as perquisites. It is taxable as capital gains. So that is out of purview of salary. And guys, there's one more stage to these ESOPs. Subsequently, the employee might sell off these shares to a third party. In that case, there will be capital gains which will accrue in this particular case. And those capital gains we'll be dealing with in our chapter of capital gains, not in our chapter of salary. Okay, sir, got it? Let's move on to the next perquisite, which is the next perquisite. And yes, next perquisite is motor car along with chauffeur's salary. So what is this chauffeur? What do you mean by chauffeur? Chauffeur means driver. Chauffeur means driver. This is the spelling of chauffeur. And in simple words, chauffeur means driver. So, sometimes car is given to the employee free of cost. Employee is using that particular car. Okay. Free of cost, he's using that car. And driver is also given to the employee. And the driver's salary is also paid by the company. Driver's salary is also paid by the employer. So, in case motor car and driver is provided to the employee, then what will be the taxable amount of perquisite? That is what we are going to study now. Now, motor car is granted to the employee. Employee might use it for official purpose. Employee might use it for personal purpose. Employee might use it for official plus personal purpose. There can be three situations. There can be three uses of this particular motor car plus chauffeur's salary plus driver. Employee can use it for official purpose. He can use it for meeting the clients, meeting the debtors, meeting the creditors, or doing some work of office. He can do he can make use of this particular motor car for official purpose. He can make use of the motor car for personal purpose. Now this is very, very dangerous. Okay, he can make use of the car for personal purpose. He can make use of the car for official plus purpose. Personal purpose, he might use it partly for personal purpose, partly for official purpose. This can also be the case. So Jyotish says, in case of accommodation in hotel for more than 15 days, whole 15 days, or we exempt first 15. We exempt first 15 days, Jyotish. We exempt first 15 days. Okay. Official use, there will be no perquisite. In case of official use, there will be no perquisite because the entire income is taxable as perquisite. In case of purely official use, in case of 100% official use, there will be no perquisite at all. In case of personal use, if the motor car is being used for personal purposes, then guys, this particular perquisite will be taxable in hands of the employee. If the employee is using only for official purpose, only for work of the office, he is taking this car, then no perquisite at all. Perquisite will be taxable if the taxi or the motor car is being used for personal use, then perquisite will be taxable. How will the perquisite will be taxable? So if the car is owned by the employer, there may be two situations. A, car is owned by the employer. Number two, car is owned by employee. So if car is owned by the employee, then it's employee's headache. Why would it be taxable as perquisite? Guys, even if car is owned by the employee, then there can be a situation where maintenance of the car, petrol, diesel expenses of the car are being met by the employer. Even if the car is owned by the employee, then also the maintenance charges of the car or the diesel charges, petrol charges, the coolant charges, or the other maintenance running charges are undertaken by the employer, this can be a situation. So under that situation, it will be a perquisite. So yes, ownership of the car is with the employee, but its running expenditure is being undertaken by the employer. In that case, there'll be a perquisite. And in case car is owned by the employer, then guys, entire amount of depreciation, which actually the employer should not be having, because the employer is not using it for his own purpose. Employer is using it for personal purpose of the employee, right? Then entire amount of depreciation and entire amount of maintenance charges should be the taxable perquisite in hands of employees. Let's read. When it is maintained by the employee, then perquisite value is depreciation, because maintenance is done by employee, it is not done by employer. So the value of perquisite is depreciation. Only depreciation is the value of perquisite. But when it is maintained by employer, if the employer maintains the car, it is owned by the employer and also maintained by the employer, then depreciation plus maintenance charges is the value of perquisite. Please understand this difference, okay? If the maintenance is done by employee, if the employee is doing maintenance, if the headache of employee maintenance is with the employee, then guys, the perquisite is with respect to depreciation only. Depreciation is the value which is actually borne by the employer, but its benefit is being taken by the employee. So it is depreciation is the value of perquisite. But in case it is maintained by the employer, if the employer is maintaining it, then depreciation as well as maintenance charges both are being incurred by the employer for the benefit of the employee. Then the perquisite value is depreciation plus maintenance charges. Second, car is owned by the employee. If the car is owned by the employee, if the employee is the owner of the car is owned by the employee, then A, it is maintained by employee. If it is maintained by employee, then perquisite is nil, because ownership is also with the employee, maintenance is also with the employee, then the perquisite value is nil. We will not charge any perquisite value, okay, because the expense is entirely borne by employee and he's personally using it. What is there to be taxable as perquisite? There's nothing which is taxable as perquisite, because it is owned by the employee. Employee has purchased it. Employee is also bearing maintenance cost of it. So we have no problems. But we have a problem where the car is owned by the employee, but it is maintained by the employer. The maintenance charges are being paid by the employer. In that case, we have a problem. When the car is owned by the employee, but it is maintained by the employer, we have a problem over there, because the maintenance charges which are paid by the employer to the for maintenance of the car are actually used for personal use of the employee. It is used for the personal use of the employee. Therefore, we are definitely going to charge perquisite value of maintenance charges, including chauffeur's salary. So chauffeur's salary is included in maintenance charges. So guys, simple as it is. What is the simple technique? The simple technique is that guys, if the car is owned by the employer, right, then we have to see depreciation is definitely borne by the employer, because whosoever is the owner, he bears the depreciation. So depreciation is obviously owned by the employer. Now we have to see whether maintenance charges are being paid by the employer or the employee. If the maintenance charges are being paid by the employer, then the perquisite value will be depreciation plus maintenance charges. But if maintenance charges are being borne by the employee itself, then we have no problems in it. We have absolutely no problem in it. If the charges of the maintenance charges are being borne by employee, then the perquisite value will only be the depreciation, because depreciation is claimed by the owner, who is the employer. However, if the car is owned by the employee and maintenance is also done by the employee, then perquisite value is nil. We will not charge any perquisite. Okay. But if the maintenance is done by employer, then maintenance charges will be the value of perquisite. Maintenance charges will be the value of perquisite. That is the difference in calculation of perquisite. Okay, sir, got it? Okay, and the next is the complex one, guys, the complex one. If there is a mixed use, then this is actually a little dicey. Can he charge depreciation under 32? Yes, he can charge depreciation under 32. Absolutely, yes. Because the car is being used for official purpose, then he can charge depreciation under section 32. Okay. Official plus personal use. If the car is being used for official plus personal use, we'll refer the next slide to calculate this particular perquisite. But before that, let us read some notes. The note says, recovery, if any, from the employee must be reduced from value of perquisite. So if anything is being recovered from the employee regarding this particular perquisite, if anything is being recovered from the employee regarding this perquisite, that will be reduced from the value of perquisite. Whatever is recovered from the employee against this perquisite, that will be reduced from value of perquisite. Vehicle provided for journey from home to office is not taxable perquisite. So if the transportation facility is provided from home to office, office to home, okay, to and fro from office to home, then it is not regarded as a taxable perquisite. Taxable perquisite of a motor car will only be eligible when the car is being used by the employee for his personal purpose, okay, not for commuting from work to home. That is not a chargeable perquisite, because that is purely official use. That is not a personal use, that is purely official use. So no perquisite will be taxable in that particular case. Okay, one more important thing, guys, one more very important thing, one more important point that I need to discuss over here, guys. If the car is owned by the employer, if the car is owned by the employer, if employer is owning the car, then it is taxable in hands of employee only when the employee is a specified employee. Only if the employee is a specified employee, then only this perquisite is taxable in hands of the employee. We'll discuss in our subsequent slide what do you mean by specified employee. Okay, sir. Now, guys, first of all, we are going to discuss, I've told you, the complex part of it. Complex means case where motor car is used for official plus personal purpose. So car is used for both official and personal purpose. That is what the perquisite is all about, and we need to calculate the perquisite in this way. Motor car used for official plus personal purpose. When motor car is used for official and personal purpose, both of them, then this is the value of perquisite. Number one, car is owned by the employer. Again, when car is maintained by the employer or the car is maintained by the employee, we bifurcate it into two parts. Now, guys, let me tell you one very frank thing, guys. In case we were valuing the perquisite when it was entirely used for personal purposes, then all the expenditure which was incurred for maintaining or using that car was the total amount of perquisite. Okay. Now, in this particular case, when half of the portion is for official use, half of the portion is of personal use, then out of the total value of perquisite, only a particular portion is taxable as perquisite. Only a particular portion is taxable as perquisite. So in this particular rule, we are going to study, we are going to see what is that portion, what is that proportion of the value of perquisite which is taxable as perquisite. So we are going to split, basically we are going to split the expenditure into two parts: official use, personal use. Personal use we are going to tax as salary. Official use we are not going to tax as salary. That is the bifurcation which we are going to do in this particular part, right? Okay, guys. So when car is owned by the employer, if the car is owned by the employer, then undoubtedly, guys, depreciation is first thing that will be charged as a perquisite in hands of the employee. If the maintenance is by the employer, if the maintenance is also by the employer, then depreciation plus maintenance, both of them will be taxable in hands of the employer. However, if maintenance is done by the employee, then only depreciation is taxable in hands of the employee. Now, the question is, so what will be the value of that depreciation and maintenance? We know the total value, sir. We know the total value of depreciation. We know the total value of maintenance. How to split it between personal use and official use? How to split it? Guys, no need to split it. Income Tax Act has given you specific numbers to tax. Simple. Income tax has given you taxable perquisites. Simple numbers to tax. Okay. So if your car is less than or equal to 1.6 cc car, cubic capacity of the car is 1.6 cc, then perquisite value is 2400 per month, 2400 per month. If your cubic capacity is more than 1.6, then your perquisite value is rupees 1800 per month. That is the difference. The cubic value is rupees 2400 per month. The cubic value is 1800 per month. If the car is owned by the employer and maintained by the employer. Car is owned by the employer and maintained by the employer. But if the car is owned by the employer and it is maintained by employee, which means only depreciation is charged to tax, then if the car is less than 1.6 cc, then perquisite value is 900 per month. If the car is more than 1.6 cc, then perquisite value is 600 per month. They are the perquisite value of the cars which are there. That is how, if the maintenance is done by employee, then the maintenance, the chargeability is as under perquisite value is 900 per month and 600 per month respectively for a smaller car or a larger car. That is how perquisite will be valued. Okay, sir, got it? Then second case, when the car is owned by the employee, so no question of depreciation now. Depreciation is being borne by the employee. So we are not going to add depreciation to the perquisite value, only maintenance. If the maintenance is done by employer, then only we are going to tax. If the maintenance is done by employee, we are not going to tax. Perquisite value is nil. If the maintenance is done by the employee, the perquisite value is nil. If the maintenance is done by the employer, then the perquisite value is actual expense minus 2400 or 1800, depending upon the size of the car, whether it is 1.6 cc or not. We are going to reduce the value over here. So whatever is the actual expense of the employer, since it is maintained by the employer, whatever is the actual expense which is incurred by the employer in maintaining this particular car, minus 2400 or 1800, depending upon the size of the car, whether the car is 1.6 cc or whether the car is for lesser than 1.6 cc, depending upon that, the perquisite value will be determined, depending upon whether it is less than equal to 1.6 cc or not. Then the next is specified employees. Now I told you guys in the early lecture as well that whenever the car is owned by the employer, whenever the car is owned by the employer, when the owner of the car is the employer, whenever the car is owned by the employer, guys, in that case, the taxable perquisite is taxed only in hands of specified employees. Now who are these specified employees? Specified employees are director employees, employees who are directors of the company, employees holding substantial interest in the company, employees who have substantial interest in the company, like 20% or more shareholding or profit sharing or decision making powers in the company, or aggregate salary is more than 50,000 rupees per annum, whose aggregate salary is more than 50,000 rupees per annum. That particular employee is a specified employee. Now guys, obviously 50,000 rupees per annum is a bare minimum salary of any employee. Any employee will be categorized under this particular category. There'll be very rare employees who will not be categorized under this particular category. So any kind of employees will be categorized under this particular category. So the amount of salary is 50,000 rupees per annum. Salary is 50,000 rupees per annum. Okay, sir, got it. Next is, in case a driver is also provided and car is also provided, 900 per month will be added as driver's salary. If driver is also provided along with the motor car, then 900 per month is provided as driver's salary. So Himani says, sir, larger car ki value 900 per month hogi na? Yes, Himani, it's 900 per month. Yes, Anushka, 900 per month is chauffeur's salary. Chauffeur's salary is 900 per month. Okay, SPD, you are absolutely right. 50,000 per annum is a very bare minimum minuscule kind of salary which is there for every employee now. So that definition is actually a vague definition. In current standpoint, that is a vague definition. You are absolutely right. Now, if more than one car are given for official and personal use, so if two cars are given for official and personal use, if two cars are given for official and personal use, only one car will be considered for official use and personal use, and other cars should be valued as if they are entirely for personal purpose. So the crux of the matter is that two cars cannot be used for official plus personal purpose. Even if two cars are given for official plus personal purpose, we will tax at least one of the cars as fully personal use. So only one car will be taxable as official plus personal purpose use. Rest all the cars which are given are taxable as only purely for personal purpose. Even if the assessee is saying, no, I've given two cars for official and personal purpose, we are not going to calculate two cars on the basis of official and personal purpose rule. We will calculate one car from official and personal purpose rule. We'll calculate the other car for only purely personal purpose rule. That is how we are going to value the two cars. If two cars are given, then only one car is calculated for official personal use, and the other car is calculated for purely personal use, which means 100% of the expenditure incurred on the personal use car will be taxable as perquisite in hands of the employee. That is the rule. Okay, sir, got it? So yes, guys, this was the perquisite on motor car. This was the perquisite on motor car. Okay, sir, got it. Now let's move on to the next perquisite. Next perquisite is free education to family members of the employee. If free education is given to family members of the employee, if the office or the company has its own schools which are running, in which the daughters and sons of the employees are studying free of cost, then that is also a benefit which is extended to the employees. Now what will be the taxable value of that perquisite? That is what we are going to discuss now. Okay, all right. So free education to family member of employees. Now, facility owned or not owned by the employer, whether the facility is owned by the employer or the facility is not owned by the employer. In both of the cases, if the facility is given to the children of the employee, then guys, perquisite cost of such education in similar institution minus 1,000 per month per child is the value of taxable perquisite. So if facility, whether the facility is owned by the employee, whether the facility is not owned by the employee, in both the situations, guys, if the facility is given to children of the employee itself, then perquisite value is cost of similar education in similar institute. So whatever similar institutes are there in that particular area, whatever is cost of education over there, that will be the perquisite in hands of the employee, because we will assume that if employee would have admitted his child, his ward, in a school which is located in the periphery, similar kind of school, then he would have incurred certain expenditure. So that expenditure which he would have incurred will be taxable as perquisite in hands of the employee. Only 1,000 rupees per month is exempted in this particular part. 1,000 rupees per month is exempted in this particular part. Other family members, if the education is provided to other family members who are not children of the employees, then perquisite is cost of education in similar institute. We won't give the exemption of 1,000 per month in this particular case. Then it says no restriction on number of children. Any number of children can be there. S means perquisite taxable only in hands of specified employees. So this is taxable only in hands of specified employees. And I've already proved that, almost all the employees of today's companies will be specified employees. Now, when other family members are there, then when the facility is owned by the employer, perquisite is taxable only for specified employees. So, guys, in this case, when family members are being provided education facility, then, guys, in this case, when the facility is owned by the employer, then the perquisite is taxable only for specified employees, not for all the employees. So, if the facility is owned by the employer and the facility is provided to family members of the employer, then it is taxable only in case of specified employees. Like in case of children of employee, guys, in that case, only the specified employees are taxable in that particular case. But in case the education facility is given to other family members of the employee, then it is taxable only when the facility is owned by the employer and perquisite is given to the other family members. Then it is taxable only in hands of specified employees. Next is reimbursement of education expense to the employee. So if a certain employee is actually making its children study in a particular school, okay, and the school fees is reimbursed by the employer, then guys, it is fully taxable for all employees, including central government employees. The reimbursement of education facility is fully taxable for employees, all employees, including the central government employees. It is fully taxable. Okay, sir, got it? So these are small perquisites, guys. We have already done the major part of the perquisite in our earlier lecture. We have already done it. Okay, now movable asset of employer. In case of movable asset which is given to the employee other than motor car. Okay, this is other than motor car. Motor car we have already studied. Motor car we have already studied. This is other than motor car. If any other movable asset is given to the employee, then what will happen? Used by the employee. If it is given just for use by the employee, if it is owned by the employer, the asset is owned by the employer, or the asset is hired by the employer. If it is owned by the employer, then perquisite is 10% of the original cost. Use of computer, laptop, etc. is not taxable. So if computer, laptop, etc. are given to the employee, then it is not taxable as perquisite in hands of the employee. Use of motor car is not included here. Even use of motor car is not included over here. If the assets are hired by the employer, then what will happen? Perquisite value is the hire charge paid by the employer. So whatever expenditure the employer is undertaking on behalf of the employee, that entire expenditure is taxable as perquisite in case of movable assets if they are taken on rent, if they are taken on lease. Second, if the assets are being sold to the employee, sometimes what happens is the old assets which are belonging to the company are sold to the employees. Employees are given those assets either free of cost or at a very, very minimal price. Then what will happen? Perquisite will be WDV minus the sales price. So if sales price is less than the WDV, then only perquisite will arise, right? So if the WDV is 10,000 and you have sold this particular WDV to the employee at 9,000, so you are giving him 1,000 rupees benefit. A thing which is worth 10,000, you are giving it for 9,000, you are giving benefit of 1,000. 1,000 will be taxable as perquisite. Now WDV is to be calculated using the rates which are given in this particular schedule and not the usual rates which are given in PGBP chapter. Okay, you will forget the depreciation rates which are given in PGBP chapter, and the depreciation rates which are used for calculating the WDV will be these rates: electronic items or computer 50%, motor car 20%, any other asset 10%, and SLM method. No depreciation to be charged for part of the year. If the asset is only being used for a part of the year, then don't charge any depreciation on that particular asset. This is the same rule which we have already studied in PGBP, guys. In PGBP also, if the asset is being used for part of the year, depreciation is ignored for that part. Okay. Okay, sir. Next is, all right, medical facility to employee or his family, especially when the employee is going outside for getting the treatment done. So medical facility to the employee or the family of the employee. What is the value of perquisite in this case when medical facility is provided to the employee or the family of the employee? Provided inside India. If the medical facility is provided inside India, guys, in case of non-government employee, medical facility maintained by the employer, if the medical facility is maintained by the employer, or expense incurred in specified hospitals for specified diseases, then it is fully exempt from tax. We are not taxing this perquisite in hands of the employee. If the facility is owned by the employer or maintained by the employer is maintaining the facility, employer is maintaining the dispensary or the hospital or the clinic, then nothing shall be taxable in hands of the employee. Employee will be given this benefit free of tax. Nothing shall be taxable in hands of the employees. However, if it is not owned by the employer, if the facility is not owned by the employer, then what will happen? That is the next rule which we are going to study now. Okay, in case of government employee, hospital is maintained and approved by government. So if the government employee is taking treatment in any of the government approved hospitals, it's absolutely free of tax. No tax is levied on it. It is absolutely free of tax, fully exempt. Okay, so in case of non-government employee, that is private employee, medical facility maintained by that particular employer, that will be taxable in hands of the employee. And if expenses incurred in specified hotels for specified diseases, which is approved by CCIT. CCIT is Chief Commissioner of Income Tax. So if the specified hotels are approved by the CCIT and the specified diseases are also there, then that is fully exempt. In case the medical facility is provided outside India, that is very, very important, guys. Then there has to be traveling outside India. The medical facility in, say, Italy are very, very strong. So there's a disease which is curable only in Italy. In that case, provided outside India, the employer provides the medical facility outside India. Medical expense and cost of stay of patient and one attendant. This is exempt up to RBI permission. So medical expenses of the employee, if it is reimbursed by the employer, right, and cost of stay of patient and one attendant is reimbursed by the employer, it is not taxable in hands of the employee if it is to the extent which is permitted by RBI. Cost of travel of the patient and one attendant. So this is cost of travel. Guys, this includes only cost of stay and medical expense. This includes cost of travel, okay? Cost of travel of patient and one attendant only. If you have two attendants, the amount is not exempt. If you have two attendants. Exempt if gross total income of the employee, excluding the cost of travel, is less than or equal to 2 lakh rupees. So if that employee is a very, very low salaried employee and the employer is actually doing a favor by extending some help to the employee for getting the medical treatment done, then the cost of travel is exempt if the gross total income of the employee is 2 lakh rupees, less than 2 lakh rupees. Family means, what do you mean by family? Family means, so we have used the word family over here. The expenses of the employee or his family are as per these rules. Family means spouse, children, parents, sibling, wholly mainly dependent. Okay, spouse and children may or may not be dependent. However, parents, siblings should be wholly and mainly dependent on the employee. Only then the the amount of expenditure will be fully exempt. Medical allowance is fully taxable. So any kind of medical allowance which is given to the employee, it is fully taxable. No exemption for any medical allowance. Allowance means when the amount is reimbursed in terms of money, and money is given to the employee, that is allowance. Okay, so if allowance is given, then it is fully taxable. No exemption at all. All right, guys. So these were the perquisites which were there in our syllabus. So I've tried to cover majorly all kind of perquisites, right? Majorly all kind of allowances, all important allowances and perquisites I've tried to cover in the earlier two lectures, today's lectures and the earlier lecture. Next topic which we are going to start in the next session is retirement benefits. Retirement benefits is next, which are going to start in the next coming week. Okay. Now, an important announcement: this Sunday there is a test of salary plus perquisite plus allowances. So this Sunday, what is the date on this Sunday? Guys, the date on this Sunday is 27th of March. Okay, 27th of March, and I'm writing it on the board. Please note the dates very, very carefully. 27th of March 2022, there's a test of what? Of salaries plus allowances plus perquisites. Three topics till perquisites. I'm going to take your test. No retirement benefits will be asked in this particular test. Only the thing which will be asked is the the initial provisions of basic salaries provisions, allowances provisions, perquisite provisions. These three things for test, which is scheduled this Sunday. Sunday is 27th of March 2022, most likely in the evening time, as we as we fix. So if you want to be part of the WhatsApp group, then guys, please message on 9643 929913, and you will be added to the WhatsApp group, where the link to the test will be provided to you and all the essential details of the test will be provided to you, plus the PDF format of these notes, these charts which I prepared. The PDF format of these notes will be available in that WhatsApp channel and in that WhatsApp group. So yes, that's all for this particular session, guys. Please note down these points well, and please give the test properly. Please be regular in the test. Salary chapter, we are just about to finish in maybe one more class or half a class. I think half a class will be required, or maximum one more class is required for finishing the salary chapter. Then we are going to start the next chapter, house property. So yes, that will be a short chapter, and then we are going to start PGP, which is the lengthiest chapter of your syllabus. PGP and capital gain, which are the lengthiest chapter of our syllabus. So just be in pace, just be in in line with my revision series. And yes, hit a like button if you like these videos, to motivate me for taking these sessions regularly and more often. Just hit a like button and share these videos with your friends, and I'll be providing encrypted version of these videos to you as well. Through the Google Drive link, which you already have, that also I will provide it to you. These are very, very useful for you for your examination point of view. Before your examination, you can quickly revise your syllabus using these videos. So yes, till we meet again, till the next time, till the next class, all the very best and happy studying. Bye-bye. Bye, guys. Welcome, welcome, everyone. Welcome.